Harris, co-head of global research for RBC Capital Markets. He's joining us from today's Buttonwood gathering. It's sponsored by the Economist magazine. And he spoke about a survey results showing that hedge fund executives are fearful over a slow economic recovery and weak growth. Welcome, Mark. Thanks for joining us.
Thanks for having me very much.
So I found this quite interesting that you do have these hedge fund managers who are still fearful. If they're fearful, who's been driving up the market over the past few months? Because there we've seen optimism reflected.
Well, there you go. There's the fundamental question, right? And I do want to point out, it wasn't just hedge fund managers, right? This was a survey we took of 700 executives across the board, all the big institutional capital markets participants. We talked to, and the Economist, we worked with the Economist Intelligence Unit to put this together. It was everybody from private equity firms, mutual fund managers, pension fund managers, hedge fund managers, corporates who wanted to raise money, the whole panoply of everybody who touches the market, either borrowers or lenders be, if you will. The idea was, let's get a pulse on the market. Let's figure out what is the capital raising scenario out there. How do people feel about the world ahead, the next 1 year, the next 2 years? And you're right. What we found out was that despite, and this was taken in July and August, right? This was after a huge market rally, credit and equity both moving up hugely. What we found was that there's still an enormous amount of fear in the market, as you point out. What does that mean? My take on that would be this is exactly what you want. If we surveyed 700 market participants, they all told us the world was a wonderful place after the worst financial crisis we had seen in a lifetime, I would be telling everybody to sell everything. I would have been scared out of my head. Instead, you have that market tension, which is what you want.
So in other words, people are perhaps rightly cautious when they look at this market. Does that mean, do we get any insight as to what that's going to mean for stocks, for example, over the next several months if people are this pessimistic?
Sure. Look, I think that what it probably means, in my interpretation of it, is it's more likely to mean an up market than a down market here. You have people literally getting dragged by the tide, portfolio managers who, frankly, are concerned, certainly are looking ahead. We have a number of statistics in there that I think were pretty interesting, talking about the idea that, a third think that the U.S. may lose its status as a reserve currency within 5 years, not in a generation, but in 5 years. We had people talking about, the Fed, the U.S. government, the regulators in general around the world as basically being toothless in their ability to be able to deal with it. And a majority is coming back and saying that in the survey. And yet, at the same time, you still have the market going up. How's that happening? Well, people are getting pulled by the tide. They're looking back at last year's numbers, and this is an institutional fact. They're looking back at their last year's numbers, seeing horrible performance, and realizing if the market's going up, they need to be there with it. Even if they're reluctant participants, this is a typical process of coming out of recovery. The band stretches really tight. It goes down too far. Companies that everybody thought were going out of business that frankly shouldn't have been acting as if they were going out of business are snapping back quickly. Now,
Mark,
everyone's questioning.
I'm sorry, but then what happens if all of these dire predictions come true? Even if they're getting pulled by the tide, they're still invested. And then what happens if the dollar isn't the reserve currency and the economic recovery does take much longer than expected?
Well, that's the million-dollar question, right? As we get towards, the end of 2010 and all of this unfolds and we figure out, did, the $2 trillion in stimulus sloshing through the economy in various forms actually work? Did it get the real economy going again? That is going to be the question. Look, I don't have the tea leaves any more than you do or any more than anything else. I sat in a dinner for Buttonwood last night listening to George Soros and Roach talking about the idea of what they thought was going to happen. They're both bears. That being said, I think they both understand that the market may continue to go up over the course of the next year ahead.
Okay.
Get to that point, though, and the stimulus may work.
All right, Marc Harris with RBC Capital Markets, thanks very much for coming on talking to us about that survey.